As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankur Periwal. Thank you, and over to you, sir.
Thank you, Peter. Good evening, friends, and welcome to PVR Limited's Q1 FY23 post-result earnings call. The call will be initiated with a brief management discussion on the earnings performance, followed by an interactive Q&A session. Management team will be represented by Mr. Ajay Bijli, Chairman and Managing Director, PVR Limited; Mr. Sanjeev Kumar, Joint Managing Director, PVR Limited; Mr. Gautam Datta, CEO, PVR Limited; Mr. Kamal Gyanchandani, Chief of Business Planning and Strategy and CEO, PVR Pictures; and Mr. Nitin Sood, CFO, PVR Limited. Over to you, Mr. Bijli, for the initial comments.
Thank you. I'd like to welcome you all to the earnings call to discuss the unaudited results of Q1 FY23. I hope you had an opportunity to review our presentation and results, which have been uploaded on our as well as on the stock exchange website. I'm happy to share the quarter ended June 30th, 2022 was the best quarter in PVR history with the highest ever revenue, EBITDA and PAT. Please note that the above numbers are after adjusting for the impact of Ind AS 116 relating to lease accounting and are different from the reported numbers which we submitted today to the stock exchange. This robust performance was driven by the strong bounce back in theatrical admissions, with 25 million patrons visiting our cinema during the quarter. This is further bolstered by a strong growth of 23% in average ticket price as compared to Q1 of 2019 and 20, which is a pre-pandemic period, to 250, and a 32% growth in average food and beverage spend per head as compared to Q1 of 2019, to 134 rupees, which is the SPH. The quarter was marked by the release of some of the biggest domestic hits like KGF 2, which went on to become the second highest grossing domestic movie of all times. Net box office for the KGF 2 alone contributed 23% to PVR's overall box office collection for the quarter, which is the highest ever movie collection by PVR. RRR, which was released in the last week of March, had significant spillover revenue in the last quarter. Bhool Bhulaiya 2, Vikram, Doctor Strange from Marvel, Top Gun, Maverick and Jurassic World, Dominion were the other big movies that did well during this quarter. The content pipeline in the months ahead looks promising. Over the next few months, we have several big budget Bollywood movies lined up for release like Shamshera, Lal Singh Chaddha, Brahmastra and Vikram Vedha. From Hollywood, we have Bullet Train, Wars of Fury, DC League of Super Pets, amongst others. From the regional genre, we have Vikrant, Rona, Liger, Godfather, and Ponniyin Selvan. On the F&B front, the company recorded the highest monthly average F&B revenue of 100 plus crores during the quarter, with strong underlying growth in SPH. The robust growth was a result of our team's focused efforts on F&B initiatives. The company has opened 14 screens across 3 properties in the last quarter and is fast ramping up its capex plan to open a total of 125 screens by the end of the current fiscal. About a third of our new screen addition will be in Tier 2 and Tier 3 cities, and we will be entering into 9 new cities during the year. The entire capex will be funded through internal accruals and liquidity available with the company. Our screen portfolio currently stands at 854 screens across 173 cinemas in 35 cities in India and Sri Lanka. Gross debt during the quarter has reduced sequentially by 91 crores and was 1,414 crores as of the end of Q1 FY23 as compared to the end of the Q4 FY22 net debt was 844 crores. A quick update on the progress of the proposed merger of Inox Leisure Limited with the company. Both the companies have received no special certificates from the 2 stock exchanges, that is BSE and NSE, on the proposed scheme of the merger, and in the process of filing an application for the approval of the scheme of merger with NCLT in the next couple of weeks. I'm told that NCLT process typically takes anywhere between 5 to 7 months, so we seem to be on track. Given the excellent performance of the movie in the last few months and a very promising lineup of content that is up for release during the rest of the year, we are expecting full recovery in admissions and advertising income over the next couple of quarters. I believe that this year will be a great year for the company. With these opening remarks, I open the platform for any Q&A. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from Avnish Roy from Edelweiss. Please go ahead.
Yeah, thanks. Congrats on a very good set of numbers. My first question is on your slide number 16, essentially SPH to ATP ratio. If I see almost every year, you have managed to improve it. So from 28%, it has now become 54%, and versus pre-COVID also there is 500 with jump. So where do you see this number settling? Because now would you go for a better occupancy and slightly lower ATP? So could this number keep going up in the medium term in the next 2 to 3 years? SPH to ATP?
Yes, definitely. At least you're the first person to ask, always the first person to ask the first question. So that's something that intrigues me. But in the meantime, I'll ask Gautam to answer this question. But he's been the force behind taking the percentage of F&B to ticket prices. He's been working relentlessly. So Gautam would like to answer this question, please.
Yes. Typically, we've been at about 50-55% now, and we believe that there is still huge room for this to grow. And we are gradually going up every year, as you rightly pointed out. So we believe that this is really about the glass ceiling. There are still certain cinemas where we could be 80% of the ATP. So this trend has to just now keep growing. We seem to have a great strategy in place where the both quality of food, hospitality, and certain promotions which are run around F&B seem to be working very well. And, in a couple of years, we can clearly see that the SPH could be matching our ATP. And to your question of saying, does ATP need to be blended down? No, ATP will continue its path and growth, and so would SPH. This proportion of SPH to ATP has to keep getting better. That's the endeavor, that's the focus, and that's the vision. And we believe that every year we will only notch up a few percentage as we go forward.
Sure. My second question is on ad revenue on an overall basis and on per screen basis. How do you see the normalcy coming back in terms of ad revenue per screen versus pre-COVID? Why I'm asking this is currently still Q1, Q2, we expect huge cutback by advertisers because of the inflation pressure which they are seeing. On the other hand, we are also seeing discretionary sectors come back. So if you could discuss a bit on the mix of advertisers also versus pre-COVID, has that changed anything dramatically? And in terms of normalcy versus pre-COVID ad revenue per screen, when do you see that happening?
There's lots of questions that you asked, but let me give you a macro trend here. We believe that quarter 2, we should be getting our averages a lot better than the pre-COVID numbers of the Q1 as against Q1 of last year. Currently we are in a gap of about 38%. This should be reduced to about 20% in Q2. By Q3, which is really a festive period and a lot of advertisers begin to advertise, we believe that we'll be within the pre-COVID levels or maybe 5 or 7% lower. And I am very certain that by Q4 we will end up sort of exceeding the pre-COVID numbers. So that's going to be the trajectory. Having said that, Yes, there's also been a big churn in the advertisers. Those used to come earlier to now. We are seeing a lot of traction with new age advertisers who've come in. Some of the FMCG and the multinational brands are taking a little more time. And we hope that by quarter 3, they would possibly be back at the cinemas. So that's largely what it is. Retail clients are showing a quicker turnaround, and we are seeing that while the RO size is small, but they are kind of coming back to cinemas much faster. So overall, I think quarter 2 is going to be a little under pressure, but the average will get better than what we have achieved in Q1. But Q3 is really where I believe that we will be largely in the hitting range of pre-COVID numbers.
So just to get clarity, if I see your ad revenue in Q3 FY20, it was almost double of what you have done in Q1. So you are saying you'll be ending up pretty close to that. So you think in 2 quarters you can kind of double this number? Around 120, 115 crores, 110, 100?
Yeah, when it begins to ramp up, these numbers can really jump up. And with some of the big releases which are going to be there around the quarter 3, which I said was the most, a quarter where the maximum footfall also gets in, I believe that we will be in around a very good range of what we had done pre-COVID. So that's where I feel we will be. In quarter 3, we'll be able to get there.
Sure. One last question. So one concern I think a lot of investors are having is on the performance of the main Hindi movies, which is extremely important for you in terms of box office. So when do you see it fully reviving? What is the issue here? I understand the usual answer of content, but we are definitely seeing South Indian movies doing consistently well, and while Hindi movies are not doing well. So it can't be only content. Is there some other issue also?
No, there is no issue with this, obviously. I think it's too early. It's only been 3-4 months since the movies have started coming. And, basically, I'm not going to write off Hindi movies so soon. There are some big movies lined up. So people just want to watch whatever appeals to them. And it just so happens that these 2 big films did exceedingly well, and they have overshadowed other releases. But we've got, Shamshera coming tomorrow. We have Lal Singh Chaddha, Raksha Bandhan on a very big weekend in August, which is a 5-day weekend from 11th August all the way to 15th August. And then we have Ramastra coming. We have Vikram Vedha coming. So there's some big movies coming, and these are the big names. And then you have smaller movies which have always traditionally become sleeper hits in the past. So there is no, it's just 1 quarter is too short a time frame to draw any conclusions that, that only regional films will dominate and Hindis will not do well anymore. We have to let the whole year pan out. And I don't see any problem whatsoever because there's some prolific filmmakers and directors and actors, even the Hindi film industry, who are also seeing this happening. And they'll bounce back. No problem whatsoever.
Okay, that's all from my side. Thanks a lot.
Thank you. Our next question is from Aaron Armstrong with Ashmore Group. Please go ahead.
Hi, good afternoon. Thank you very much for taking my question. First question would be around box office, please, and kind of relates to some of the earlier points made. But can you talk about the box office growth and the revenue growth that we've seen this quarter, and whether that reflects pent-up demand and very good slate of movie content, or does it more reflect the PVR gaining market share and the consolidation of the industry? Just kind of where you would place the emphasis on those 2.
Amal, would you like to take that?
Sure. Firstly, I think the performance of Q1, and if I was to also include March 2022, the performance in these 4 months reflects partly the pent-up demand. It also reflects and it also puts the debate that whether people would come back to theaters, whether the consumer appeal of movie theaters has gone down. Streaming has taken away a lot of eyeballs. slate has been put to rest, and that's reflecting in these 4 months admissions. It's also the quality of films. Some of these films which came out were exceptional films. Marvel came out with Doctor Strange. Warner came out with Batman in March. Mr. Sanjay Leela Bhansali came out with, another addition to his ever-growing list of successful films. And of course, we had KGF and RRR, which surprised everyone on the positive side. So it was a mix of pent-up demand. It was a mix of the fact that this whole debate came to an end. The consumer appeal for movie theaters is very much intact, and it's also the quality of content. I would also like to add another point to the earlier question from the panelists, where there is a concern about some of the Hindi films underperforming, and Mr. Bijli summed it up and he answered it comprehensively. I would only add one point to it, that Hindi films have done well. Gangubai, Kashmir Files, Bhool Bhulaiya, even Jug Jug Jio, which came out recently, they have all done well. And also, we have to keep in mind that KGF and RRR actually performed a lot better in the Hindi version. And whether you would categorize them as a Hindi film or would you consider them as a Kannada or a Telugu film is a matter of debate. Depends on which angle you're looking at it from. But we think of them as Hindi films. And the way we look at it is that if RRR, KGF, which are films essentially dubbed in Hindi, can do so well. Imagine when a Hindi film in the original version with a popular actor or with multiple popular actors, the film which will connect to audience, imagine the upper limit for those films. Imagine the potential for those films. We see it as a big positive, and those were the 3 elements why we think content has done well. These 4 months have done so well for us.
Thank you. And perhaps on the market share side of things, would you say that your market share is now higher than it was pre-COVID? Any kind of consolidation signs or smaller operators exiting the market?
That's a good point, and thanks for adding that question. Definitely the market share of, I would say, larger chains which have more credibility with the consumers, definitely the market share of such chains has gone up as compared to the pre-COVID period. I won't comment on consolidation at this point because we are in the midst of a merger. But your question on whether smaller chains are exiting, to be honest, at a very macro level, at a very high level, the number of people who have exited the business is a fairly small number. It's a moderate part of the overall screen count in India. We reckon it's less than 10%, and it's mostly those cinemas which were underperforming or which were not contributing with any meaningful box office even during pre-COVID. Those are the ones who have exited. So from industry point of view, at high level, there hasn't been a lot of exit.
Thank you. Perhaps just to tag on one final point, if I may, please, would be just around the sustainability of the excellent numbers that we've seen this quarter. We spoke about pent-up demand. We've spoken about a very strong slate of film content. Does that kind of feed into an expectation that we could see some softer quarters later in the year?
Subsequent quarters would have certain quarters which will exceed expectations, and there is a possibility that certain quarters could underwhelm in terms of admissions. But to be honest, the way we see it, the way we look at the lineup that we have in the third quarter and the fourth quarter of this current financial year, we feel fairly confident that this could turn out to be a year which will end up with admissions, aggregate admissions, which are a lot better than what we did in 2019-20. We feel extremely buoyant looking at the lineup and the response that we got from the audiences. That said, our business is of hits and misses, and I think it's best to look at it on annual basis rather than on quarter-to-quarter basis in terms of admissions. There are segments like Hollywood films which have a depressed number in terms of quantity. Quality is fantastic. Doctor Strange, Spider-Man, Top Gun, all of these films have exceeded the expectation, Jurassic World. But as far as the quantity goes, studios are still ramping up the production. Same is the case with Hindi films. Producers are still ramping up the production. There has been a lot of disruption in terms of shooting over the last 2 years. So we could have some surprises as we move forward, but I think at an annual level, for the entire financial year, we're looking at very strong set of numbers in terms of admissions.
That's great. Thank you.
Thank you. Our next question is from Jinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. Sir, I have a question on the windowing gap, which I suppose was expected to revert to the end of July. So has that already happened? That is question number one. And secondly, if I'm not mistaken, we recently piloted one program which allows subscribers to watch movies on weekdays by paying some monthly subscription fee. So if you can shed some light on this plan, how has been the response to it, that would be really helpful.
Your first question on Windows, answer is yes. On 1st August, we will revert back to the erstwhile 8-week window, which is what used to prevail, be prevalent pre-COVID. So we will revert to 8-week window on 1st August 2022. On your second question, with respect to subscription program, I would request my colleague Gautam to share some comments.
Hi. Actually, on the subscription, we had to go a bit slow simply because the regulatory authority had some issues regarding, payments, recurring payments for over 3 months. So there were certain negotiations and certain clarity required from the regulator. We are planning to go and launch this in a big way. We've already sort of piloted this project. However, on the recurring payment plan, there was some certain amount of, as I said, regulatory concern, which has been managed now. And we'll be now going full steam with the phase 2 of the launch.
Sure, sir. And secondly, I have one question on the bookkeeping side. If I look at our electricity and utility charges, they are lower by about 4% when I compare it with the pre-pandemic days. Now, this is despite the fact that we are operating with a higher number of teams in 1Q. So, if you can highlight the reason behind it. And secondly, in the opening remarks, we mentioned that our debt is down by about 90 crores odd sequentially. So where exactly do we expect to end the year with on the debt side? So that's the second question.
I think the reason for low electricity costs is because of the tight control that we kept at operating level on some of the unit consumption. Also, some of the states we've got relief from the government which are temporary in nature. So I think both of things coupled, helped us is to keep the costs, the unit consumption under check. But these costs will gradually rise as there is an increase in power costs all over. But we will try and keep them under a tight control as much as possible. Also, on your second question around leverage, I think the operating cash flows of the business continue to remain strong. And, since we will be opening a lot of screens this fiscal year, the focus during the next 9 months will be to, use some of the operating cash flow to, fund most of the growth. So it's difficult to say what our net debt numbers will look like. We want to sustain those numbers because we want to reinvest all the operating cash flows into growth. And that will be the focus for us this year.
So basically, if we are funding our capex needs via operating cash flow, essentially the debt levels should not rise from here on. So is that
No, they will not rise from it. they will not rise from here.
Sure, sir. Thank you so much.
Thank you. Our next question is from the line of Harit Kapoor from Investec Capital Services India. Please go ahead.
Yeah, hi, good evening. Just had two questions. The first one on the rent side. So if you take the rental numbers 2.1 plus 1 to 0.5, that's about 2.6 million per screen. We've seen a roughly 26% kind of increase in rental costs as well as 18% in CAM. I think over a 3-year CAGR, you kind of about 4.5% on comparable property. Just wanted to get your sense about whether this 2.6 million is something that we have to now expect on a going forward basis, because this is the kind of pent up increase which is over a 3-year period, which will imply that rental revenue is a little higher than what your pre-COVID number was. So how do you think about this?
Yeah, first of all, our rentals will continue to grow with on a contracted basis, roughly 4 to 4.5% CAGR. But our revenue growth, is much stronger than that. So I don't know why when you say that our rent to revenue ratio will keep rising, I'm not able to get that, because rent to revenue ratio should actually, either remain same or get lower, because the revenue growth is stronger than, the rental growth right now.
No, I meant for this year. So this year so far, I mean, look at FY, if you look at quarter 1, you're at 23%, which is compared to quarter 1 20, I think you're at 21%. So that number is higher. Is this like a rebasing and then from there it starts to come off in 24 months? Is that where you look at?
No, I think that's not the correct way of reviewing this, because, Q1 revenue still does not reflect full recovery in admission, still does not reflect full recovery in advertising revenue. So in that respect, I think you should look at the rental number on an annual basis. Even for Q1, on 1,000 crore revenue, our rent is about 180 crore, which is about 18%. So, there is, from a rent to revenue ratio perspective, there is no material change.
Okay. Maybe I'll take that offline. The second question was on the personnel cost side also. You mentioned that, there is an expected move up on account of incremental wage inflation. This quarter, you kind of managed it at similar levels, which is down 2%. I think you had made a comment that, you'll try and keep it in the similar ballpark as pre-COVID. So just want to know any change in that thought process, given the recent kind of, as I said, wage inflation as well as the incremental.
Yeah, I think our personnel cost per screen will move up by about 9 to 10%, from existing levels on account of wage inflation, which is, minimum wage increase and increments for people over the existing levels. But on an absolute level, if you look at, the amount of headcount reduction that we managed to squeeze in, we intend to sustain that. There will be very limited increases in the headcount savings that we've managed to achieve. But, if you look at a 3-year period and then compare, and factor in the inflation for 3 years, it is significantly, lower as compared to the revenue growth that we are seeing.
The last question was on, you mentioned that, admits are not yet back fully. This seems like a fairly normal quarter where, you had some big films as well. Obviously, you had a very, very good overall revenue performance led by ATP and HCS as well. I understand that occupancies are a little lower, but wouldn't you think that this is as normalized as it could get from a footfalls perspective? Anything I'm missing there?
I think it would be slightly premature for us to, come to that. I think we've not had a full run of operations. There is still a large segment of people who have not shown up at the cinema. Our sense is it will take a few months for the full recovery to play out as more films get released across theaters, as more genre of films released across theaters, whether it is Hindi films or big tentpoles like Avatar, which will draw consumers back to cinemas. So the full recovery will take, another 6 months to play out. Our sense is by December of this year, where you have had a big run of films, effectively recovery should take out shape fully, because We must also understand that in a country like India, there is a very large segment of people who show up at the theaters only once or twice a year. So for that to, play out, you have to give it time and see a full recovery. So our sense is by end of December, we should be hopefully be able to see some of that.
Okay, that's it. Thanks and all the best.
Thank you. Our next question is from Pratik from Nippon India Mutual Fund. Please go ahead.
Yeah, hi. Just wanted to check, with this rebasing of rent which has happened plus the 5% red share, how should I think about SPH and ATP, especially in quarters which are dull or where there are more hits or more misses, rather than hits?
SPH, there will be no change at all. And largely, we feel that a 30% growth can easily be maintained. On ATP is really a function of, what kind of films get released. So if we do not have a mega blockbuster or a tentpole film, then ATPs could be depressed by about 10 or 10, 12 rupees, but nothing very significant. But given the flow, whenever we will have big films, that we'll be able to record similar ATP growth as well.
Okay, this is really helpful. And secondly, if you were to break down the admit recovery between metros, tier 1, tier 2, can you just give us a flavor where is the slack or the degrowth coming from, or which pocket is contributing to the highest degrowth?
Kamal, would you like to take that?
Sure. Given the recovery, the tier 1, tier 2 have had similar recovery, but there are pockets within tier 1 which are underwhelmed in terms of admission. You could attribute it to the kind of films which have done well, because these films were targeting the lowest denominator. They appeal to a certain sensibility, and as a result, certain pockets which tend to be affluent have shown results which are inferior as compared to certain other pockets. That's one. Number two, like Nitin touched upon briefly in his commentary, there is a large number of people who come to our theaters once a year. There is also a sizable number of people who come only twice. We, from various analytics that we do, we are observing that a lot of those people have not yet come back to theaters, which means cinemas which are more dependent, cinemas which have more frequent moviegoers in their catchment, they are showing superior recovery, and catchments which have less number of frequent cinegoers are showing slightly inferior recovery. But also, like Nitin mentioned, these are still early days, and we have to give it another 5 to 6 months to form a firm view on which are the areas which have underperformed and which are the areas which have done better. But yeah, that's a very high level sense of what's happening in the marketplace at this point.
And Kamal, let's say this continues after 6 months. What do you do to get the admit back? In the sense, we continue to see negative or decline in footfalls, right, on a like-to-like basis. What do you do to get the footfalls back?
So the way we see it, and all possibilities are there on table. You're right. I mean, there could be certain quarters which underperform. But the way we see it, at a very high level, like I mentioned earlier, the consumer sentiment or the consumer preference for theater going is very much intact. Producers who were experimenting a lot with different models, different distribution models. I mean, in some cases they were going direct to streaming. In some cases, at least in US, it
producers, distributors were releasing it simultaneously with theatrical, even on streaming. All of that has stopped now. Windows are back. Producers have come to a conclusion, and I think even streaming platforms recognize and respect the fact that the erstwhile model of following Windows, being respectful to Windows, is the right way of creating value for the entire ecosystem. Also, when we look at the films which have been lined up and the kind of response that we've seen for PVR, Spider-Man earlier in November last year, films like Pushpa, which released with pretty much no marketing, not a very known popular face in the Hindi world, the kind of performances, even films like Rocketry, which picks up later. What we are seeing is that the consumer sentiment is to escape. People want to escape from news. People want to escape from, this constant war or inflation or other worries which we have in the economy. And they are finding cinema still as the best platform to get this escapism. And the success of films that have performed, the quantum of and the scale of success is clearly showing that this possibility of this year underperforming is very remote. Your question, sorry I gave an elaborate answer, but your question, what will we do? I would not get into that because that is all sensitive, strategic information. But frankly, from our prism, the way we look at the whole situation, we don't see that situation panning out this year. This year looks like we're going to have a V-shaped recovery, a very sharp bounce back. At the end of the year, that's what we're going to finish with.
And lastly, thanks for this, very helpful. And lastly, just wanted to check, can you call out Q1 FY23 industry box office collections? Is it possible?
So industry-wise, you're asking?
Yes.
I can tell you that in the first 6 months, I don't have the breakup for Q1 and Q4 of last year and Q1 of this year. But the data that we have is that the gross box office of the industry, and I'm sharing gross box office, not the admission, is roughly 5,700 crores, which is slightly better than what the industry did in 2019. And this, considering the backdrop that the whole of January got spoiled because of Omicron, and then half of February was impacted because of Omicron. So even with that constraint, finishing the first 6 months with 5,700 crore box office is a fairly aggressive achievement. A lot of pent-up demand, a lot of credit goes to KGF, RRR. But those are the numbers. So first 6 months, about 5,700 crore, better than 2019.
Thanks for this and all the best for it.
Thank you. Our next question is from Anurag Dayal from HSBC. Please go ahead.
Yeah, hi. Thanks for taking my question. First question basically is about fees per screen. So as per my calculation, I could see that fees per screen has been coming down. It used to be around 220 odd, which has come down to around 210 or below that in this quarter. So what's the reason behind it? Is it because you are moving more into smaller towns and opening smaller properties? Some light into this and how to see it going forward. This is how to be monitored. Yeah.
Yeah, I think the new properties that we've opened, have average lesser number of screens. Some of the premium properties that we opened like Maison or, a new director's cut in Gurgaon, etc. They are more premium with a much smaller auditorium count, more premium in terms of facilities. So yes, our average seat count on the new screen portfolio is close to that number. About 200 odd screens per seat, depending upon how the mix is evolving, at that particular year, your averages reflect that way. Or also, we've shut down few cinemas which were old, and dilapidated. Total operation. And also to add what Nitin said, we are adding more premium screens in our circuit. And except for IMAX and PXL,
all the premium formats are largely operating in slightly smaller body sizes. So whether it's the 4DX, whether it's the Playout, whether it's other formats as well, Lux and Director's Cut, they all operate on slightly smaller body sizes, which technically brings the average a little down.
Okay, just a follow-up on this is, I understand that around 12% of screens are premium right now. So how do you see it going forward? If how much, ballpark would go the next 5 years, say?
Sorry, Anurag, can you repeat your question?
Yeah, I'm talking about the share of premium screens is around 12% currently. So how you see it going forward over the next 5 years? It would be higher. How much? Something target. Is there any target which you have in mind?
Yeah, I think we are focused on creating more and more experiential cinema offerings. I think our sensitivity keep inching up, but I think over a long period of time, say next 5 years, this number could potentially look like 18 to 20% from 12% levels.
Thanks a lot. I have another question. Is basically what I have read is you are exploring a franchisee route, for screen additions, a kind of asset type model. So what is the thought process behind it? And if you can give some insight on how the mechanics of franchisee cinema work for you guys, anything, any directional in terms of how much it is, high or low in terms of capex and opex. Anything insight will be very helpful for that.
No, I think it's slightly premature for us to talk about that. Once we launch a few screens and we open a few screens, we'd like to talk a little more about that. I think